Good morning, guys. I hope you guys are having a good Monday and a good week, of course. Today, guys, I'm gonna be following up on the Great Britain pound versus US dollar. As we spoke yesterday, and on my previous video on the British pound versus US dollar, we discussed and we analyzed it for the week ahead. And what you see right now is that we're on the daily chart. Remember what I told you yesterday, that the price was overbought on Friday, and most of the investors would be looking to take profit, and hence the price is retracing as it is right now, as you can see on the screen, or as you can see on the chart. So I told you guys that it's already too late to be buying. It was not time to be buying. One thing that you could have done maybe would be to sell, because it was on the upper channel of the let me say, on the upper line of the rising channel. Besides that, the price was already overbought. I mean, you don't just enter and keep buying because it's already too high. You don't chase momentum, guys. You don't enter trades too late trying to get whatever you can get. You're already too late. So what we see right now is a retracement, as we spoke on the previous video, that the price is bound to retrace no matter what. The price has to go down, guys. But the challenge for most people is that they don't know when the price is going to go down. It's very predictable where the price can go down. As you can see right now, the price had to come back down on that level, because we spoke on the previous video that 1.18 is a serious resistance, because it's a support that was strong, that was broken. So that's to act as a serious resistance. But then it's not always like that, but then the chances are high that it has to. And other factors are showing us that it has to. So we can see this rising channel, and you can see that the price is on the upper channel, on the upper side of the rising channel. So of course we're expecting this retracement. So let's go down to a lower chart, because I know you guys just want to know where you can enter for today. It's a Monday, 14th of November 2022. You want to know where to enter because you guys want the money. You want a lot of talk, but then of course before we can go and talk about the money, we have to understand what we're doing first. So let's go into the 4-hour chart. There's that big gap here. This gap here, it showed that a lot of people just took their profit abruptly, and the market had to catch up. Hence the price has gone down. But then even though it tried on this buyer to go and close, didn't really close properly. But then it's fine. Every gap usually gets closed. But then the question is, when does it get closed? That's one thing you should understand. So guys, we're on the upper side of the rising channel, and now we're gonna expect the price to retrace, of course. So where can we expect this price to retrace to? Because today there are no news coming from the pound, and there are no serious news coming from the dollar. So today is going to be one of those lazy days when the market can actually be moving a little bit sideways, because tomorrow is a Tuesday. We're going to be expecting jobs reports from the UK, unemployment rates, employment change, and all those things. So those are going to be moving the markets tomorrow. But then today is going to be a bit of a lazy day. But then doesn't mean that we won't have any trades. There are going to be trades that we're gonna take today while we're waiting for tomorrow's data. So before we can go ahead and open any trades, let's just pull our Fibonacci's. I'm gonna pull Fibonacci's from here to there. Just okay. So yesterday I told you guys that it would be much better for you to sell. Those of you who listened, maybe they sold from that level, and maybe they placed their stop loss here, as I said, at 1.188 something. Then of course you'll take your profit somewhere there. Fine. It's up to you, but then guys, just maintain a profit risk to reward of 1:2. So in this case, guys, you can see the price retraced to 23.6 Fibonacci level right here. We don't know if ever this level is gonna hold for the price to continue going up, or it's gonna keep coming back down maybe to this 382 level. or it can even come back to the 50% level here, which you can see it was a previous resistance that was broken, which was 1.15987. So there's a huge chance that the price can actually come back down here to this level, and that looks interesting for me. If ever you guys wanna be trading for today, you can take that trade, but then I'm gonna show you where to enter and where to place your stop losses. So what I'm gonna go ahead and do on my side is that I'm gonna keep going down to the other time frames, 1 hour time frame, to check my options, and I'm gonna go ahead to the 30-minute time frame. I'm gonna end there. There's nothing interesting for me here. It's almost the same as the 1 hour. Let me go back to the 1 hour time frame, 1 hour chart. Remember, the 50% Fibonacci, guys, is here. Where is it? 1.1592. So that's gonna be my trade for today. It's 8:47 in the morning. I'm gonna be entering this trade. I'm gonna be showing you how to calculate everything. I'm gonna be entering here at this current price of 1.17600, and my stop loss is gonna be at here at this high of what, 1.18542. That's gonna be my stop loss right there. But then I'm gonna make my stop loss be a little bit higher. Let me say 1.1857. Yeah, 1.1857. That's gonna be my stop loss, but my entry is gonna be 1.17600, which is the current price. So it's gonna be a market execution, guys, and my stop loss is gonna be 97 pips below, because this is a 97 pips stop loss. So what I'm gonna do is this. I'm gonna go to my forex calculator. Currency, GBP US My account balance is $200, guys. That's the one that we're using to demonstrate on this video. My entry price is 1.17600. I'm risking 3%. I think it's gonna be too much, guys, this one, because it's already 97 pips. But let's forget about my risk and focus on what you guys can do. But as long as you manage your risk, because right now I'm trying to demonstrate to you my entries, let's forget about the risk for now. But then you guys must understand that your risk you must always maintain it to 3%. This account is a demonstration account, guys. Remember that I'm trying to demonstrate to you. So all I have in this account is $200. The money is real, but I'm doing this to show you where to and where I'm entering my trades and where I'm going to exit my trades. So you guys must make sure that when you open your accounts, when you open your trades, you're actually risking only 3% of your account. Don't risk more than that, because look at me, I'm already risking much more. Let me do this. In this trade, I'm actually gonna be risking how much? I'm actually gonna be risking $10. I'm actually gonna be risking $10 here, guys, because it's 97 pips, so it's $9.70 with the lot size of 0.01. So let's go ahead and go and do it. As you can see here, I guess you can see everything here. So let's go back to the chart. So I'm gonna go ahead and place my trade right now. I'm placing my trade with the lot size of 0.01. Market execution, stop loss at 1.1857. My take profit is gonna be this price minus 97 pips times 2. My take profit is gonna be 1.1566. Sell. Done. You can see, guys, these are my open trades. These are some of the trades that are running, and yeah, that's the $200 account that I was talking about. Now let's go back there. You can see they're appearing there. So I'm gonna be taking my profit around here at the 50% Fibonacci level. There you can see it. I'm selling there at the current price, and my take profit is gonna be here. You can see on the chart, and my stop loss is gonna be up there at this price, just above it, at 1.1857, just above that high here, this high here. There's my stop loss. So meaning if the price continues up, guys, for today or tomorrow, I'm gonna be stopped out there. I'm gonna lose my $10. But then if it comes down, I'm gonna make a profit of $20, which is twice my risk. So let the trade run. And now that's my morning trade for this Monday. You can go ahead and do your own things. You've already placed your stops and everything. You don't have to be sitting here and watching the trade. All right, guys, so that's for now. Thank you, guys. All right, so now we're looking at the euro, Swiss franc, the one we analyzed of also yesterday. We're in the 4-hour chart, guys. Remember what I told you yesterday? I said this thing will have to retrace and come to retest. If there's anything that you could have done was to buy, but then I was saying if you buy it, make sure you place a stop loss of 60 pips, which was going to be somewhere here at 9682 888 or something. You see, if you bought here, you'd be maybe in your profit all the way coming up. So we don't know where it's going to actually retest to, but then the chances are high that it's going to retest to that level. So guys, are you already too late? Yeah, I wouldn't advise you to be buying here. When it comes to euro Swiss franc, I'd say just leave it, wait for it to retest fully, then maybe we'll start looking for setups to go downwards. So for today, guys, leave this one, leave it, this one, don't enter. It's already too late, unless if you want to force and buy, yeah, but then place your stop loss here and maybe you wait for it to come back to retest there. But it's already such a little distance, the risk to reward is already bad. Yeah, it's already bad, guys, it's already bad. So if I were you, I'd just leave this one, let it do its own things, and just focus on the GBPUSD. Yes, you can try to sell it, that one as I showed you, but then for this one, just leave it. Let it just retest, and from there we'll start looking for sell setups. Guys, enjoy. These are my 2 trades for this Monday. Just enjoy. If ever there's something that you want me to record and show you, maybe do the analysis on it, you can just comment below and I can just do my analysis on it and send them to you guys. All right, guys, thank you. Enjoy your day.